Hey Slopers, it's Brian Johnson again with thestockmentor.com. I have not done a video in a while. Well, that's not altogether true. Actually, I've done some videos, but I've just recently realized that I haven't been posting them correctly. So I've done videos, but they haven't made it out. I just actually figured Tim was, had a lot of material and just didn't have any use for the videos and just hadn't put them up. And I was cool with that, whatever, that's fine. And then I realized I wasn't posting them right, so they never even actually made it across Tim's desk. So anyway, regardless, I took some time off over Christmas, did just the bare bones to get by, spent some time with the family. Now I'm back in full swing. And the videos I've done in the past are, of course, of no consequence at this point, so we'll just start with the most modern and work our way from there. Uh, the video I want to do today is just to, first of all, I want to talk about a little something that was posted the other day. It was on Tim's site by Tim, actually. And it's something I've been thinking about for a while, too. So, small soapbox time, but I'll keep it short. And that is there are some major publications out there, and I won't mention names, but they have been in the habit of trying to call tops lately. And they've been consistently wrong in calling those tops. And unfortunately, what happens is you have traders out there that they're not necessarily traders. They just want to be told what to do, and whatever they're told to do, they just do. So part of it is their fault, but we also have to accept responsibilities if we're ones offering up. I believe, in my opinion, we have to take a little bit of responsibility for what we're saying in our videos and just be careful about the way we phrase things and what we say, because there are some people that will take us literally and they'll just do whatever we tell them to do. And you need to understand that these publications that are done, I love them, I love to read them, and I respect the people that do them. They do a very nice job and they're well put together, and that's why they're probably as popular as they are. But underneath it all, always make sure you realize that they're just people. They're just guys and gals, whoever, doing these certain publications. And they don't have crystal balls. They don't know where the market's going to go tomorrow. And they make mistakes. They're not perfect. So you have to be able to do your own analysis and use the publications in the way they were meant to be used, and that is as a second opinion to what your opinion is. Use them in that way. That's the way they're meant to. Even if they come out and say, this is it, it's going down, Armageddon, it doesn't matter. Use them in the way they were meant to be used, and that's as a second opinion. And know your stuff. Spend some money. Get yourself an education and know what you're doing in the markets. It is ultimately your money, and it is ultimately your responsibility to protect that money. So feel free to read the publications. Just use them in the way they were meant to be used and learn for yourself. Know what you're looking at when you look at a chart, and just use everybody else's opinion as a secondary opinion to maybe back up or dissent what you're saying about the markets themselves. Okay, so let's move on. Now, with that being said, allow me to give you my opinion on where I think we are and where I think we might be headed next, and use this uh, in along with your own personal opinion. All right. So what we came out of here back in November is a huge run up, and then you can see us bouncing back and forth. I'm using the SPY. Why? Because if I move to my SPX, you wouldn't be able to read it. I think I'm the only one that can decipher the hieroglyphics that I do on my charts. So this is the most clean that I have right now, the most clean chart. So here we are bouncing back and forth. These levels basically relate to 1085 and 1115 on the SPX. And we bounced back and forth for a long time, many weeks, before we eventually broke out and moved to the upside. There were many calls of tops. And we didn't know what was going to happen. I kept calling out, just wait for a break at 1085 or wait for a break of 1115 before you make your move. Now what we've seen is a move back up, and guess what we're doing? Yeah, well, we're kind of back in the same boat as we were back here. We're moving sideways again. It's a trading range. This one I put between 1130 and 1150 for myself. So I ultimately may be playing this up and down, and it's pretty much buy support, sell resistance, buy support. If we get back up here, I'll sell resistance until we see a break of one direction or another. Then I'll start to get a little bit more serious about my position sizing and about the direction of the markets. But until that happens, wait for a break of either 1150 to get really long this market, or more seriously long this market, or 1130 to get more seriously short this market. Right now, the bears and the bulls are still duking it out, and it's just lather, rinse, repeat. Exactly what we saw back here for weeks on end. Who knows how long this will last? So wait for a break of either of these levels. Now, if Armageddon is about to come and we're about to sink to 300 or whatever it is on the SPX, I'm telling you now that if you wait for a break of 1130 and you don't get short until 11:20 or 11:15 or whatever you want to decide to do, 11:10, believe me, when we're sitting down there towards 800 or 700, whatever, if we reach those levels, you are not going to care if you got in at 11:10 or 11:50. That 40-point difference really isn't going to make that big of a deal to you at that point when you're down at 700 or 800 or whatever it might be. So put it all in bigger perspective. We cannot call a top. We can't do it. We don't know. The market can stay irrational much longer than any of us can stay solvent. So keep that in mind as we push forward. We're just waiting for the best trade that we can get before making our move. So where's that? If you want to go short at 1150, great. Very defensible based on what we've seen in the past. If you want to get long at 1130, fantastic. Why not? A very defensible place. You can put a 3 to 5 point stop on it and you're fine. It's okay. If you're waiting to get more short, you want to wait till you see a nice break and ultimately a close of 1130. Same way with the 1150 area if you want to get long and wait for it to get up above that. But until that happens, be careful with your money. Keep your position sizes small, maybe in the middle of this chop so you don't get your hand slapped every other day. And just wait for a little larger move. Above 1150 or below 1130 should give you a much better idea of where the direction of the market is going next. And that'll do it for today. So I hope you guys enjoyed the video. Be back with you again, hopefully a little sooner than last time now that I know what I'm doing. You guys take it easy. Nice visiting with you again here on Slope of Hope. Talk to you later. Bye.